Bro, today's pre-market setup is not normal. Global cues are mixed, SGX Nifty is flat, FIIs dumped nearly 2,000 crores rupees, and yet, Indian markets are showing unbelievable strength. Crude is cooling, the rupee is weakening, and some sectors are preparing for a breakout. So today, is it a trap? Or is something big loading? Let's break it down, Wealth Maama style. Global market cues. Let's start with the world. Because today global markets are sending a very confusing signal. US futures are slightly positive. Dow up 0.07%, S&P up 0.17%, and Nasdaq futures up 0.29%. That means Wall Street is steady and risk appetite is improving. Europe is also on the positive side, with FTSE futures up 0.15% and DAX up 0.04%. Nothing dramatic, but stable, which is good for us. But Asia is where the twist comes in. Japan's Nikkei 225 has crashed 1.40%, which is a huge fall. Meanwhile, Shanghai is down a mild 0.11%. So overall Asia is mixed. So globally, the message is simple. No panic, no euphoria. Market is neutral with pockets of weakness. Commodities, India's secret advantage. Now bro, here's the part that actually supports Indian markets today. Crude oil is trading around $59.52, down nearly 0.25%, and Brent crude is at $63.16, down 0.16%. This is extremely positive for India because lower crude reduces inflation pressure and boosts sectors like paints, aviation, chemicals, and logistics. Gold is down 0.31%, showing investors are moving away from safe havens. Silver and copper are slightly positive, which means industrial demand is stable. Overall, commodities are cooling, and that gives India a big advantage today. Currency, weak rupee, strong IT. The rupee is weakening slightly. USD INR is at 89.87, up around 0.07%. A weak rupee is bad for oil imports, but it is fantastic for IT companies because their revenue comes in dollars. So expect stocks like Infosys, TCS, HCL Tech, Wipro to show early strength. FII DII flows the real story. Yesterday's institutional activity was dramatic. FIIs sold 13,444 crores rupees and bought 11,500 crores rupees, meaning a net sell figure of 1,944 crores rupees. They're cautious, probably due to global uncertainty and rupee weakness. But DIIs came in as superheroes again. They bought 16,489 crores rupees and sold 12,828 crores rupees, giving a strong net inflow of 3,661 crores rupees. This is the reason Indian markets didn't fall yesterday. FIIs are selling, but DIIs are refusing to let the market drop. SGX Gift Nifty the opening signal. SGX Nifty is trading around 26,186, down just 3 points, which is literally nothing. So today's market is expected to open flat to slightly positive. No gap up, no gap down, just stability. Nifty technical setup. Yesterday, Nifty closed at 26,033, up around 47 points, with very strong market breadth, 34 stocks up and only 16 down. Nifty defended the 25,940 level beautifully and tried to push toward 26,100. Here are today's important levels. Support, 25,950 and 25,870. Resistance, 26,100 and 26,180. Breakout zone, above 26,250. Breakdown zone, below 25,950. If Nifty crosses 26,100 at the open, momentum buying can come in. If it slips below 25,950, expect weakness in the morning. India-specific factors. Today, India has a few factors that traders must watch closely. First, crude cooling helps sectors like paints, aviation and FMCG. So expect Asian Paints, Burger Paints and Indigo to see activity. Second, the weaker rupee boosts export sectors, especially IT and pharma. Third, with the RBI policy meeting approaching, interest rate-sensitive stocks like NBFCs, banks and real estate may remain slightly cautious. Finally, DIIs are extremely active. Their buying today could decide the market's direction. Stocks to watch. Infosys, TCS, HCL Tech and Wipro could open strong because of the weak rupee. Asian Paints and paint-related companies could gain from falling crude. Banks like ICICI, Kotak and HDFC Bank may remain range-bound unless FIIs return. Reliance stays the wild card. One big move from Reliance can shift Nifty instantly. Autos like Tata Motors and Maruti may stay weak due to global cues and rupee pressure. So bro, today the market is not opening with panic. It's opening with stability. Mixed global cues, strong domestic flows, weak rupee and falling crude all point toward a mildly bullish start. Keep your eyes on 26,100 for a breakout and 25,950 for a breakdown. And as always, we'll meet again at 12 p.m. for the Nifty midday update. This is Wealth Maama, giving you fast, sharp and quick market updates. Hit subscribe bro because today's intraday move is going to be interesting.